Today, crypto investors await the unveiling of President Trump's new tariffs on goods imported into the U.S. Circle files for an initial public offering with the SEC. And Paul Grewal of Coinbase weighs in on the Stable Act, the piece of stablecoin legislation facing a markup in the House today. Welcome to CNBC's Crypto World. I'm Katie Tarasov. Major cryptocurrencies mixed, with Bitcoin climbing 1.7% to $86,800 as of noon Eastern. This as investors await President Trump's announcement about tariffs, which is expected to detail sweeping new levies on goods imported into the U.S. That's expected to happen at a Rose Garden event at 4 p.m. Eastern. Taking a quick look at crypto-focused stocks, specifically Bitcoin miners, all are in the green as of midday, with Bitfarms rising the most, by 10%. The move higher comes after Bitfarms announced an initial agreement for a private debt facility of up to $300 million with Macquarie Equipment Capital. The funding will help fuel Bitfarms' data center and AI growth. Okay, let's talk about the top stories. Circle, the company behind USDC stablecoin, filed for an initial public offering with the SEC. This marks a long-anticipated move by the stablecoin issuer, which unsuccessfully attempted to go public with a SPAC merger in 2021. Yesterday's filing reveals that JP Morgan and Citigroup would serve as the underwriters, and the companies would trade in the New York Stock Exchange under the ticker CRCL. Fortune reports that the IPO aims for a valuation up to $5 billion. Taking a look at some of the provided financial data, the company reported $1.7 billion in revenue for 2024. That's up from around $1.5 billion the year before. Circle also reported $156 million in net income last year. That's down from the roughly $267 million reported in 2023. According to data from CryptoQuant, Circle's USDC makes up about 26% of the market cap for stablecoins, a space dominated by Tether. However, Circle's market cap has grown 36% this year, compared to Tether's 5% growth. Next, BlackRock received the nod to operate as a crypto firm in the UK. The asset management giant landed on the Financial Conduct Authority's list yesterday of registered crypto asset firms. This comes a week after it launched its first Bitcoin exchange-traded product in Europe, expanding its offerings after a successful spot Bitcoin ETP release last year in the US. The UK's financial regulator rolled out the registry in early 2020, and as of today, only 51 firms have gotten the all-clear, including Fidelity, PayPal, and Galaxy Digital. BlackRock is only the second firm to make it on the list this year, joining CB Payments, a subsidiary of Coinbase. We reached out to BlackRock to ask about its plans in the region, but the asset manager declined to comment. Finally, Google issuing a warning, saying North Korean IT workers are ramping up cyber activities in Europe and are targeting blockchain projects. That's according to this alert out yesterday from Google Threat Intelligence Group, which said some of the targeted projects are built on the Solana network and include job applications and boards. The report warned that operatives in the Democratic People's Republic of Korea pose as legitimate remote workers in an attempt to infiltrate companies and generate revenue for the regime. The report also notes that this activity from DPRK workers across different countries now establishes them as a global threat. It adds that while the U.S. is still a key target, over the past few months, the North Korean IT workers have faced challenges in getting hired here. Google says that's likely due to increased awareness, DOJ indictments, and right-to-work verification challenges. All right, for our main story, let's go back to stablecoins and one of Circle's biggest partners. Coinbase keeping a close eye as the Stable Act faces markup on Capitol Hill this morning. The company has been at the forefront of industry groups pushing Congress to pass new regulation. Crypto World's Tanea McKeel spoke to the company's chief legal officer, Paul Grewal, about the bill and got his reaction to multiple states dropping their lawsuits over the firm's staking practices.
We just had the markup of the Stable Act this morning. We went through that with the Competing Genius Act a couple of weeks ago. Do you favor one or the other of these potential bills, or would you be happy with any legislation that gets passed?
Well, what we're most happy about is that we're seeing crypto becoming a truly bipartisan issue in Washington and, frankly, all over the country. In fact, I think crypto might be the most bipartisan issue in the country right now. And it's, I think, encouraging to see Congress and the White House aligned on the basic elements of legislation that will finally provide clarity and certainty to a market that has long required it.
I don't know how deeply you've dug into these bills, but are there any make or break issues for Coinbase specifically in their current iterations that you would like to see prevail, and why or why not?
Well, we supported the bill that recently made its way through the Senate Banking Committee, and we are equally supportive of the bill that is being marked up in the House today. There are differences between the two, and we have a lot of confidence that leadership in the Congress will sort through all of those differences as part of a reconciliation that ultimately will mean a law that goes to the president's desk for signature. The critical element, we think, is that Congress is acting. This is a market that has grown increasingly important with each passing day and each passing quarter and year. And it's long past due for Congress to act. And we're confident that the president will sign whatever reconciled bill ultimately lands on his desk.
One reason the drumbeat for clear U.S. crypto regulation became so loud, and Coinbase has been at the forefront of this messaging, was the need to prevent businesses from moving or setting up offshore and ultimately keep crypto business and innovation in America. We want to be a leader on this in this industry. I've heard concern about some of the language in one of the bills that it would allow offshore stablecoin issuers. Tether is an obvious example, although I'd say most stablecoin issues are based outside the U.S. That would allow them to list on U.S. exchanges without having to register the way a U.S. issuer would have to. And as you know, compliance costs can be enormous for startups. Is that a concern that you share, that language would discourage companies, smaller ones in particular, from setting up here if they can do so abroad, list their token here, and avoid the burden of compliance?
Well, we think it's not only reasonable but important that stable coins issued here in the United States comply with U.S. law. And we're pleased to see the bills in both the Senate and the House recognize that. But it's equally important that stable coins be interoperable and that we have full compatibility across global markets so that consumers and institutional investors have confidence that the stable coins they're acquiring and using in their day-to-day business functions and daily lives can work with one another no matter where they may be sourced. We're pleased that there's a recognition of that in each of these bills. And of course, the details of how all that work will have to be worked out, but we're confident that congressional leadership will be able to meet that challenge.
All right, let's change gears here and talk about staking. Kentucky dropped its lawsuit against Coinbase over staking services, and that makes it the third state in recent months to take this step. It follows Vermont and South Carolina. Tell me about the significance of this. I mean, the SEC filed to dismiss its own lawsuit against Coinbase, which included your staking program, and that was in February. What do these state dismissals mean in the grand scheme of things for your product roadmap and for Coinbase's overall vision of creating a global on-chain economy?
Well, there's no question that the dominoes keep falling in terms of these individual enforcement actions brought by the SEC in the first instance and a number of the states against staking are being dismissed, and for good reason. They had no basis in law, and we're pleased to see that red states and blue states alike are joining the SEC in recognizing that reality and instead choosing to focus on legislation in certain cases and overall support in others to encourage access to staking products and services for their customers. I think it's all the more reason that we need to see a market structure bill fast follow the stablecoin legislation that is being discussed today in the House. Because with market structure legislation in place, with a clear allocation of responsibility across the federal government for securities transactions on the one hand and commodities transactions on the other, products like staking services can, I think, become much more available to consumers across the United States and provide greater security, greater durability to the networks that these tokens participate in.
Yeah, and so this started in Vermont, a blue state. Kentucky dropped the litigation a week after Andy Beshear, the Kentucky governor who has been on the rise among Democrats, signed the Bitcoin rights bill into law, which establishes protections for crypto users in that state. I don't know how much you want to weigh in on this, but what do you make of how Democrats are rebranding themselves, and how is crypto part of that?
Well, I think across the board, Democrats, like Republicans, recognize that millions of Americans want to see crypto in their financial future and have already voted with their wallets. There's no question that when you see blue states joining red states and recognizing that staking needs to be available in their jurisdictions, you're seeing progress in that regard. Just as you're seeing real progress in the form of Democrats joining with Republicans to sponsor the stablecoin legislation that's now being considered by Congress. This is not a red issue or a blue issue. This is an American issue, and I think the bipartisan support for stablecoin legislation, bipartisan support for staking products and services is a clear recognition of that.
So things are different now, right? They feel kind of good. Donald Trump has said he wants stablecoin legislation by August. Stables, like you said at the top, are one of, if not the most bipartisan issues in DC right now. And we have an SEC led by crypto allies that's dropping lawsuits and investigations against crypto companies. So it feels like kind of no one is standing in the way of Coinbase or the industry at large. And I mean that assuming that the approach toward new things is very thoughtful and intelligent going forward. So where is the work right now, and what are sort of the biggest issues of focus for you?
Well, the single biggest issue is the need to end the era of disjointed policy that was so prevalent, so dominant under the misguided leadership of Gary Gensler and the Biden administration that preceded it. What we need to see is a unified crypto framework here in the United States, not only for stablecoins, but also for market structure that brings the United States into alignment with other jurisdictions all over the world that have recognized that crypto is here to stay. You don't have to like it. You might not even care about it, but sensible rules make sense regardless of your position on crypto. And I think the president's support for that and the Congress's recognition of that is entirely in line with that future.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.